Hi everyone, this is Prashant Parthiban. Today I'm going to take a training on out of sequence transaction in property and casualty insurance. By definition, out of sequence is nothing but a transaction which is created after some bound transaction but becomes effective before the bound transaction. So let's explain this definition using an example. Say you issue a personal auto policy which is effective from January 1st, 2022 and it expires on December 31st, 2022 and it had one car plus 100k of liability limit. Now you are doing a policy change on June 1st, 2022 to add a new car to the existing policy and later you are doing a second policy change where the policy effective date or policy change effective date of the second policy change is March 1st, 2022. This is what we call it as out of sequence. If you see the second policy change effective date is March 1st, 2022, which is prior to the first policy change effective date, June 1st, 2022. If you ask me, is it a valid scenario? Yes, definitely. It is possible where you do a backdated policy change for various reasons. Maybe the insured or the customer would have sent the documentation on time, but the contractor would have taken time to issue a policy change. So it's a valid scenario. So we need a way to handle this out of sequence. So by definition, as you see from this example, every time when you do a transaction whose effective date is prior to the bound transactions effective date, then we call that as out of sequence. In this case, you had a first policy change which is having an effective date of June 1st, 2022, whereas the second policy change effective date is prior to that, March 1st, 2022. This is a very rare scenario because most of the time these transactions will be in sequence. When I say sequence, say if you issue a policy change on January 1st, 2022, and if your policy change, first policy change is on June 1st, any subsequent transactions can be on or after June 1st. It will not be like prior to June 1st. If it happens, then we call that as out of sequence. Now, it can happen for a policy change or any kind of transactions like renewal or cancellations, but this is the overall concept. Now, every time when you do an out of sequence, we have two flavors to that. One, by default, system will handle the out of sequence transaction. Second flavor is we need an end user to address the out of sequence transaction. Let's look at the first scenario, no conflict. Say you issue a same personal auto policy, which is effective from January 1st, 2022, with one car and a liability limit of 100k. Now you're doing a first policy change to add in another car, which is on June 1st, 2022. Then you're doing a second policy change to increase the liability limit of from 100k to 200k on March 1st, 2022. This is a no conflict scenario because you are doing two different changes on two different dates. Say in this case, if you are doing a first policy change to add a new car, which is always going to be effective only from June 1st. Whereas when you do a second policy change where you're increasing the liability limit from 100k to 200k, so by default, what system will do is system will apply this 200k liability limit from January 1st, 2022 until June 1st, 2022 to only one car. From June 1st, 2022, this 200k liability limit will be applied to both car number one and car number two. So there is no conflict because you did a policy change of two different, coverages or scenarios. The conflict comes where you are doing both the policy changes on the same field. So let's look at an example. Here, you issued a personal auto policy, which is effective from January 1st, 2022 with one car and the liability limit of 100k. Now, you're doing your first policy change on June 1st, 2022 to increase your liability limit from 100k to 300k. Now, for some reason, you are doing a second policy change where you are decreasing the liability coverage from 200k, sorry, from 300k to 200k. Now, this is where the conflict comes in because from March 1st until June 1st, you are good because you know it's very clear 200k. But from June 1st Should the system apply 300 or the system should apply 200? That's a question. So user have to tell the system what to do. So that's where the user intervention is required. So this is what is all called as out of sequence. So out of sequence, as I told you, every time when there is a transaction, so effective date is prior to the bound transaction, then we call it as out of sequence. In out of sequence, we could have no conflict scenario versus conflict scenario. Conflict scenario is where you touch the same field twice in two different transactions. I hope you like my training videos. If you like my training videos, please do subscribe to my YouTube channel. Have a great day. Bye bye.